Short interest is at all-time highs for Tupperware brands right now, and there are zero shares available to be shorted. So the combination of the two is implying that this stock is very likely to have a short squeeze in the foreseeable future. Also, we're seeing failure to deliver numbers at all-time highs. What I'll do in this video is I'll dive into the short interest data a little deeper. I'll talk about some insider buying. I'll talk about the financials, and at the end of the video, I will give you a price prediction for this stock. So right now, there's about 20% of the float sold short, which is definitely a huge chunk of the float. Also, there are zero shares available to be shorted right now. So zero shares available to be shorted definitely makes this stock have a high likelihood of a short squeeze. And Fintel, this site that I'm looking at here, ranks out every single stock in the market, and they give it a short squeeze ranking. And this stock is the 44th most likely stock in the market to have a short squeeze, which puts it in the top 1% of stocks on the market in terms of likelihood to have a short squeeze. So this company here is agreeing with my thesis that Tupperware Brands has a high likelihood of a short squeeze here. So the short borrow fee rate is at 26%. For those that don't know, that's basically the rate that investors are charging, hedge funds or whoever it may be who is shorting the stock to actually short the stock. So if I own the stock, I'm going to charge whoever I lend my shares to, which is more than not a short seller, a fee, and that fee is the short borrow fee rate. The higher this rate is, the harder and more expensive it becomes to short the stock. So the higher this number is, really just signals that a short squeeze is more and more likely. So we have a 26% short borrow fee rate right now. The average rate is anywhere from 0.3 to 3%. So this 26% is definitely way above average and signaling that it is quite expensive to short the stock right now. Also, there are zero shares available to be shorted. That wasn't hyperbole. That is the reality of the situation. There are zero shares available to be shorted according to Fintel. So obviously, the combination of high short borrow fee rate and a low amount of shares available definitely does set up Tupperware brands for a short squeeze. And then quickly here, I want to go over the failure to deliver numbers. So for those that don't know, this is basically when a short seller fails to deliver the shares back to the original investor after shorting them. All you really need to know about this, though, is that they're allowed to fail to deliver, but they have to actually deliver within 60 days of failing to do so, or the SEC comes after them. So all you really need to know about this number here is that within the next 60 days, there will be 564,000 shares bought by short sellers, or the SEC will fine them basically. So that's obviously 500,000 shares being bought over the next 60 days will act as a catalyst for this stock and likely exacerbate this short squeeze. So failure to deliver numbers are implying a short squeeze. Short interest is very high. Short borrow fee rate is very high. All of that implies to me that we are very likely to see a short squeeze for this stock. But with that being said, I wanted to cover something really quickly. So we had some insider buying in Q4 of 2022. We saw about 278,000 shares bought by insiders. Insiders being, the C-suite, the directors, management, those people who know the most about this company are bullish on the company. So that's obviously a good sign. Just wanted to go over that quickly. And then let's talk about the financials for this stock. So first off, I want to note that there is $2.47 in cash per share for the stock. So right now, Tupperware Brands is trading below its cash holdings. So on its balance sheet, they have more cash than the current market cap, which I think from a fundamental standpoint, kind of putting away the short interest, kind of not even thinking about that right now, I think this company offers a pretty interesting opportunity just based on its cash holdings alone. And then they have a gross profit margin of 64%. So that tells you what the company makes for what it sells, just basically revenue minus cost of goods sold. So this 64% number here definitely does signal that this company is operating in a stable standpoint, right? They're making money for everything that they sell. And then, unfortunately, I don't have a positive PE here, so I can't really analyze that. and we do have a price to sales ratio of 0.09, which is actually significantly below their 5-year average of 0.42. So on a price to sales basis, the company is trading at a discount relative to its own history. And then revenue growth, unfortunately, was minus 18% over the past 12 months. Never like to see revenue growth negative, so that's obviously not a positive for the company, but I will cover it anyway because I just want to give you a holistic breakdown of this stock. And then let's take a look at this company's holders. So one thing I wanted to note is that BlackRock sold down their holdings significantly over the past quarter. So BlackRock cut their holdings by 74% over the past quarter. But it is also worth noting that Charles Schwab increased their holdings by 86% over the past quarter. So kind of seeing a variance in terms of the largest asset managers in the world. We saw one extremely large asset manager buy more shares, and we saw the second largest asset manager in the world sell down their holdings by 74%. So obviously don't love to see BlackRock selling, but we're kind of seeing Charles Schwab kind of offset that. It's interesting, Charles Schwab actually bought for an average price of $1.65. So they're sitting on a pretty handsome gain, which is definitely notable. So that is kind of really all you need to know in terms of the institutional buying and selling for this stock. And then with that being said, let's take a look at the chart and give a price prediction as I had promised. So we crossed over the 200-day moving average for the first time since late August. So like to see that. Definitely a sign of bullish momentum there. Love to see it. And then we had the 50-day moving average cross above the 200-day moving average on September 21st of this year, obviously, which is known as a golden cross. If you're not familiar with that, that's a signal of bullish momentum. It's probably the most widely watched and followed daily moving average signal that there is out there. So nothing to sneeze at, and definitely does imply bullish momentum for the stock. Also, it's worth noting that we haven't had a bullish momentum signal like this one in years. So we haven't had a golden cross since 2020. And once we had a golden cross, we saw the stock jump from 13 to 37 over the coming weeks. So in the stock's history, a golden cross has implied further upside. Will we get that again here? I think so. So we moved over the 200-day moving average, as I said. And after we moved over this crucial DMA, we came down to test it and held in Thursday's trading session. And intraday here today, in Friday's trading session, we came down and held as well. Therefore, I believe we see a larger move higher for Tupperware brands over the coming weeks. How high could this stock go? Well, given the short squeeze numbers, I think it could be much higher than where I'm even projecting today, but kind of a high confidence move. I think we could see a quick move up to $6 for Tupperware brands over the coming weeks, given this is where shares had topped out roughly in August of this year. Also, it's where shares had bottomed in September of last year. So past support acts as new resistance as we saw in August. I believe this level will likely act as resistance once again when we come up to test this resistance level at about $6. So I kind of do see a quick move for Tupperware brands over the coming weeks, as I believe the stock, like I said, for all the short interest data that I went through, the stock has a high likelihood to have a short squeeze. Also, volume is implying that we're going to see a trend reversal in terms of price. So since shares kind of went bonkers from about 50 cents to $6, we've seen volume slump significantly, and now that we kind of seen volume slump, we're seeing volumes jump back up, and that volume jump has coincided with a price jump. And just for simple volume analysis, anytime you get a volume jump coinciding with a price jump after a massive drop in volume and price, that implies that we could see a trend reversal, which would obviously imply that we could see the stock moving higher. So volume is telling us that we're moving higher. We're getting an extremely bullish technical read from this golden cross. And we are also above all daily moving averages once again. You add it all up, it seems very likely that this stock will continue higher over the coming weeks. My prediction is $6 pretty quickly for Tupperware brand. So that's my prediction on the stock. I know it's a massive gain. I know it's almost a 300% prediction, but when you take a look at the short interest numbers, it really does make sense. So with all that being said, I hope you enjoyed the video. I will end it there.
Looking to learn more about the financial markets? Well, I just released a new course that will teach you everything you need to know about the stock market. You can find that at happyinvestingtoday.com. Also on the site, you can purchase one-on-one coaching sessions where I will break down your portfolio, and to better assist traders when searching for setups, I'm selling trading bots which will tell you how your trading strategy has performed historically on a stock, crypto, or currency that you are researching. If you would also like to see what me and my experienced trading team are doing on a day-to-day basis, join our Discord, which is linked below, for a free 7-day trial. With that being said, please leave a like and subscribe. Appreciate you watching this video.